Welcome back to Fast Market right here on Schwab Network. I'm Nicole Petalides, filling in for Diane King Hall. Joining me once again, Kevin Hinks, live at the CBOE, and it is time for our Cash Tags segment. And for that, we bring in Megan Brantley, VP of Research at Likefolio, because we're ready to talk all about Uber. Now, the stock's been looking pretty good, from $59 up to $101, over the last year, less than a year. But not too far off those all-time highs. But they've also had an investigation underway. So let's talk a little bit about this action. First of all, Megan, some of your thoughts here on this name.
Yeah, so whenever we look at Uber, as you mentioned, the stock has had a great run this year. I think it's up about 62% year to date. Last quarter had a nice quarter. The ride profitability was improving in terms of its take per ride, thanks to lower insurance costs. It expanded its mobility and delivery service. I think delivery was growing a bit faster, and it also grew its Uber One platform to, I think, 36 million people. But I think the response after earnings was pretty muted because the bar is very high, and certainly the bar is high now. When we look at Uber, we see we see things right in line with how the stock has been performing. If you look at overall consumer demand, forward-looking visits in terms of its Uber ride-hailing platform and also its Uber Eats platform, those are tracking right alongside the stock, up and to the right. And then if you dive in and say, okay, what's driving growth? We still see Uber Eats driving a bit more growth versus the Uber ride-hailing platform, even though that ride-hailing platform is the bigger piece of its pie. But everything that we're tracking is pretty much in line with what Uber has been reporting and what it reported last quarter. I would say for us, the biggest unknown looking ahead is we're trying to understand how Uber plays the long game when it comes to autonomy. We are watching the Tesla Robotaxi rollout very closely. We're watching, Waymo's Robotaxi rollout as well, and Uber has some partnerships there. And so I think that this is going to be really critical whenever it comes to long term. That's the biggest kind of uncertainty right now, at least in our world, to see how things play out. But in the near term, right now, it looks like Uber is cranking. The consumer is adopting this Uber One platform. It's leading to increased loyalty, at least here in the near term for Uber. So right now, things look about priced right for us.
Megan, as you know, you've been on this show for a while, and we've covered Uber for many, many quarters. And one of the big questions we always had was, how are they going to get profitable? How are they going to achieve that with paying drivers less and charging more? It didn't look like a business model that was going to work out. Now, a couple of years later, they are a free cash flow machine, delivering everything and people more and more. And now, one of the hidden secrets of this company that has it doing so well, it looks like their app is going to be the app for driving, driverless cars, all things moving. And the thing that doesn't get a lot of attention is advertising. Advertising has the chance now to get this company to another level. It just seems like all the worries that we had about how Uber was going to get to profitability is now just melted away. They're buying back stock. Everything seems to be getting better for this company. Yes, are there questions about robotaxis and driverless cars? Yes, but it looks like Uber has navigated this perfectly, Megan.
Yeah, at least up to this point, you're exactly right. I think that the biggest question mark for us when it comes to sentiment data and when we look at what consumers are talking about is it seems that in the big picture, consumers are less loyal to an app or a brand, and they're more loyal to what is going to get me from point A to point B, or what is going to accomplish the service that I need in the highest quality way, the most efficient way for the lowest price. And thus far, Uber has been able to really put its best foot forward and be that choice for the consumer. I think its Uber One rollout has been really successful. This is something that we track. Consumer interest in this continues to grow. I will say we have tracked a little bit of a sentiment ding because they changed some of their policies in September to kind of restrict or be a little bit more strict on the refunds that they give, or late deliveries, what rides apply for discount, things of that nature, which could be good news for the stock if you're an investor, I guess, maybe bad news if you're a consumer. But all in all, they found that members who are part of this app and this stickiness spend about 3 times more. And I think this is Uber. This has kind of elevated Uber over a name like a DoorDash or a Lyft because it has multiple services, right? It's building this ecosystem. It creates a little bit more loyalty, at least here in the near term, because consumers are saying, if I'm already paying, $10 a month for this service, I might as well use Uber whenever I'm getting food delivered or whenever I need to go from point A to point B. So I think that thus far their strategy appears to be working. We do see, growth ticking along right alongside the stock. So for us, we don't necessarily have an edge or a major, red flag. Even when we look at the consumer, we saw with Delta's report, the consumer is really resilient right now. We saw Uber say last quarter that the consumer was resilient. So we see momentum certainly in the near term. I think the biggest question mark we have, again, just long term as an Uber investor, is we did see signs when the Robotaxi did roll out in Austin that people jumped on board that Robotaxi app, right? They weren't scared to jump and adopt that and use that. So I don't think that consumers have to go through Uber. I don't know that it's necessarily fair to say Uber is the app, is the one that will win them all. I think that's yet to be determined, but Uber has certainly positioned itself to be a dominant player there and perhaps the best option if it can establish those additional partnerships in the long run. And again, I'm thinking on a very long scale when I talk about these things, but these are the things that we talk about in the Likefolio office for sure.
Yeah, no, and these are important conversations. Thank you for bringing us into your conference rooms, boardrooms, and that's the kind of thing that we want to know more about. I mean, I think the Likefolio data is so interesting. You showed us the growth that we've seen in Uber Eats and DoorDash, a close second. In fact, Mizuho really liked DoorDash a lot. But Uber Eats, obviously another revenue stream for Uber, and that's how you get to that profitability. Like Kevin was saying, having those multiple lines of profitability while the others had negative, and Instacart was a far cry behind, and then you have the Amazon grocery, so that's not even on the chart. It didn't even make it. So there's a lot that goes on, but robo-taxis and the ride sharing obviously a big part of this. So what will you look for in November 4th as it stands now? What earnings score does Likefolio have headed into the report?
Yeah, so right now we're pretty neutral. We think that the stock has had a great year and we think it's justified. Uber seems to be pulling all the right levers. It's monetizing rides better. And as Kevin mentioned, it does have that advertising lever that it can continue to pull in the near term. And it certainly has a very large and engaged consumer base. We like the strength that we see out of Uber Eats, and we like the resilience that we see at large out of the consumer. But we'll acknowledge the bar is pretty high. So we'll see how things pan out over the next month. But right now, our score is pretty neutral. We don't really have much of an edge. We're not looking for a big move either way.
Thank you so much, Megan Brantley, with all the details there, VP of Research at Likefolio.